Is that the banks easily passed the 2021 stress test. So this is some stuff that's a kind of a mixture of today and some stuff that was at the end of last week. So the Fed announced the biggest 23 U.S. banks could withstand a severe recession, which because their capital is well above their minimum required capital levels. Of course it is. They have nothing but cash. They don't even know what to do with cash. They're telling people to stop giving them cash. They keep parking it in the Fed. The Fed gives them more cash. So they have more than enough money. But some of the parameters in the scenario of the global recession, to give you an idea of what this stress test is they try to measure it against a real world recession and at some extreme levels to see how the banks would be able to maintain liquidity, because liquidity is really the main source of contractions in financial markets. You can have a deleveraging, you can have a big contraction, but you need to have liquidity to keep people happy and spending and people able to do their daily lives. So some of the things in this stress test are, it puts hits real estate and corporate debt holders. So the markets are getting hit both from real estate and the corporate debt holders, some of the biggest areas where we can see default and some damage. The peak unemployment is about 10.8%. There's a 55% drop in the stock market as a whole. So the entirety of the market sheds more than half of its value. And this would create a roughly 500 billion US dollar hit to the industry. But the capital required was still twice as much as required minimum levels. So the bank says, all right, guys, you're good. You can do whatever you want. What does this mean? Dividends and buybacks. If you thought that your interest rates on your accounts were going to go up and you were going to make more money parking your money, no, that's completely wrong. You make 0.01% and everybody else makes more. They're going to use dividends and buybacks, and they're going to push these out over the next couple of months. And what's important to note about this is that there was a lot of pushback at the idea this would cause a free-for-all in higher dividends and stock buybacks to just kind of boost the value of the companies within the stock market. They just kind of like pump that value out to give back to their shareholders. But they kind of push back against that, saying that there are still other restrictions on the banks, and this won't amount to the same type of kind of belligerent spending, and they still have to maintain some requirements of capital. But as of today, JP Morgan doubled its dividend to 70 cents a share and announced a $12 billion stock buyback plan. They yet to hear the details for how long it's going to take or when it's going to start. But JP Morgan also boosted their dividends from 90 cents to $1 a share. So that activity is going up, but we've seen stock prices up 4, 6, 7% across the banking industry today. So definitely keep an eye out for that. If you're a stockholder that owns shares of the banks, then you definitely got a windfall today. And may so for the rest of the week, depending on how these buybacks and stuff go out. Especially if you're a holder and you like dividends, well, then obviously higher dividends is going to make you happy as well. So
cash in while you can, get those dividends, and then dip out.
right, you buy in before the ex-dividend date, which is the final date you're allowed to own a stock. But you have to own a stock when you're allowed to get a dividend. So if you buy and own before the ex-dividend date, then when that dividend is distributed afterwards, you will be eligible for it. If you buy after that, you won't get that dividend. But if you're holding before the next dividend date, then you'll get it then too. So that's the ticket. Get in before the ex-dividend date, and then you'll get a cut of that dividend per how many number of shares you own. Good stuff.
Sounds good. Sounds good. So for anybody who's wondering how to use this information, that's exactly how you use that information. You jump in, you jump out. Okay.